So let's see where that goes.
Okay. And Nykaa, I thought last week was also getting a drubbing because e-commerce stocks in the US were getting a drubbing. Most of them Amazon types did not perform very well at all. So there was that shadow as well, besides, of course, the removal of the lock-in and the impending expected selling. Today, a bit of stability there, perhaps also aided by the global comeback of some of these stocks. But we have an expert joining us, so let's toss it straight to him. Our market master for the morning is Harsha Upadhyaya, the CIO Equities at Kotak Mutual Fund. Good morning, Harsha. Pleasure having you with us. Diwali greetings. We didn't speak to you thereafter. But first, it's like Diwali in the market. Do you think the index has a lot of legs to run, cross 18,000 and more, given the global tailwind as well?
Good morning, Lata. Hope you all had a very good Diwali as well. If you look at markets, I think markets continuously have been very resilient compared to what's happening in the global market. And off late, we have also seen some of the global cues improving a bit, although there is going to be more volatility in the next few months, I guess. But nevertheless, I think the stability in the global markets has also aided the Indian markets, wherein the earnings have come more or less as per expectations during this quarter. And that lends a bit more stability to the markets, I would say.
Okay, hi Harsha, morning. I recall the last time we chatted, I think you were leaning towards being positive on some of those passenger vehicle segments as well as the auto segment. Maruti's numbers look good. What do you do from here on? That auto rally has played out quite a bit, but do you believe it still has more legs?
Yes, Nigel. I think overall, when you look at auto segment, there is some more steam to go ahead, I believe. Most of the segments are seeing strong volume growth. The commodity cost pressures are easing. And for passenger vehicles, especially, we are also seeing chip supply improving a bit. And we have seen a lot of new product launches on the passenger vehicle side, which have also garnered very good interest from customers. So overall, it seems like the volume growth that we have seen in the recent past should continue with the same momentum over the next few quarters. And margins should also improve as we go ahead. Okay. And we believe that the valuations do not factor in all of this upside as yet.
Okay. Yeah, it's got not just more legs, more wheels, I guess.
Accelerator.
Room. Yeah, they are vrooming. But Harsha, I want to ask you about the e-commerce stocks. Nykaa today, after a decent amount of drubbing, is in the green now. Where do you stand on the e-commerce stocks? Of course, many of them have this immediate lock-in issue as well. But would you pick some of the good businesses in the dips?
Clearly, valuations have been expensive for most of these e-commerce businesses as compared to traditional business models that everyone agrees. As far as what's getting factored in the markets now is the fact that the lockups are going to end very soon, and that's going to lead to possibly more supply coming in. And that's what is creating an overhang. And most of these stocks which are coming up for lockup opening are seeing that kind of pressure. Our guess is if you're confident on the business, then you should be looking at purely from a bottom-up basis, not just that every e-commerce stock is the same in terms of business model or valuation. But I guess you will have to evaluate each one separately.
Right. Let's talk about a couple of these global-facing stocks, Harsha, because you have indicated in the past that the global economy is challenging, and data suggests that so. But do you think we are closer to the end of the challenge, or perhaps better off than what we were, say, about 6 to 8 months ago? And in that context, would you look at any of these IT stocks which have underperformed? And Dr. Reddy's as well, the top performer on the Nifty today after a strong set of numbers.
Mangalam, we continue to remain underweight on IT sector. Yes, in the very short term, the global cues may lend some stability to IT sector. However, we believe that 2023 IT budgets would be softer than what most participants are expecting. And even when you look at management commentary of the recent past, it seems to indicate that there are pockets of weakness in terms of various user segments such as retail, mortgages, discretionary, high tech, etc. And our belief is more of a weakness would be seen as you go into 2023. While margins have held up until now, but with weakening demand, you could also see some pressure on margins. So overall, we continue to believe that some of the domestic-facing sectors will have much more room for a re-rating if markets continue to do well rather than IT sector.
Okay.
And similarly on pharma, we continue to be very stock specific. We are not really looking at a very top-down kind of a stance on this segment. Both of these segments overall remain quite underweight.
Harsha, if we're looking at domestic-facing themes, we discussed the auto space. The consensus buy is on banks. And I think you all have been positive as well on both those two sectors. So let's talk about the banking space. If credit offtake is going to improve, the worst of asset quality is behind, at least in the near term. Would you, go further down? I think earlier you all were positive on the large private sector banks. Do the PSUs deserve a second look? Because that's been actually the best theme that has played out. If I look at it in the last 1 month or in the last 1 year, look at it on a longer term horizon, well, they haven't made much money. But do you believe that these PSU banks, they could re-rate from here?
Nigel, we do have some exposure to PSU banks and they have done well. And one of the usual concerns on this segment was how treasury yields would move and whether it will impact their treasury income, etc. But treasury yields have been broadly in a range, and I don't think that's going to really negatively impact some of the PSU banks, at least in the immediate term. And as far as the cost of funding is concerned, they have a very good cushion in terms of CASA levels. And we continue to believe that that is going to be a critical factor, especially when interest rates are moving up. If you have low cost of funding, that's going to aid margins. And as you rightly mentioned, asset quality issues are behind us, and even credit growth is improving month on month. So overall, we continue to remain positive on the overall banking space, and within which we are positive on large private sector banks, which have very good CASA on their books, and also the large public sector banks.
Public sector banks, you said. So a handful of them.
We do have a couple of them in our portfolio.
Okay. Now, the whole point is whether you will go down the couple. Everybody has a buy on SBI and BOB. That's why I'm asking you if you will go down the line. I mean, I think that was also what Nigel wanted to know.
Yeah.
No, Lata, we would remain in larger banks because that's where we will have stability in terms of CASA.
Okay.
Right. You have thoughts on, urban consumption? I mean, how would you look at names like Trent or maybe the QSR space or something like an ABFRL? Basically retail as well as urban consumption, QSRs, etc.
Urban consumption continues to be quite strong. We have seen that during the festive season, as well as you go forward, we expect that to continue. Rural is still somewhat weaker as compared to urban demand, we would say. However, each of these pockets are very, very different in terms of drivers and the valuations. So we'll have to evaluate each of them differently. But broadly, urban consumption continues to be quite okay.
No, one quiet performer have been the power stocks. NHPC, I think for the first time in its life, passed its issue price decades ago, and just climbed very fast. And likewise, we've seen a decent performance of Tata Power, though that's been more volatile. Power stocks, any thoughts?
Lata, it's not been a very big focus area for us, but we do have a couple of names in our portfolios with small exposures. Continue to have that in our portfolio, as we don't see too much of re-rating from these levels for some of these power utilities. But yes, they will give you stability in the overall portfolio context.
Okay, actually, we've been asking you, throwing sectors at you. You tell us what is your hierarchy.
We have been positive on banking and auto, as I mentioned earlier. We also have an overweight position on industrials, where we believe that investment cycle after a long time has been picking up. And some of these stocks have very good order book, and balance sheets are also very healthy. So we should see a decent re-rating from medium to long term. We are also positive on many of the other manufacturing segments, such as cement, chemicals, etc., where we believe that we continue to see growth, and margins should also start improving from here onwards as commodity cost pressures are going down. So broadly, most of the domestic-facing cyclical sectors is what we are focusing on at this point of time.
Okay, well, we will leave it at that, Harsha. Have a great Samvat 2079. Thank you very much for joining us today.
Thank you so much.
Well, we have to move